Hi, I'm Jerry. Today I want to talk about the market phases indicator. This indicator was basically developed in response to hearing it described by James Boyd, and it's very useful for, if you know the phase that the stock is in, you kind of have a picture in your mind what it looks like, and if you understand sort of what phase it's in, it can be very useful for predicting or telling you what kind of trades make sense to put on the stock. So it's comprised of the closing price of the stock, the 10-day exponential moving average, the 30-day simple moving average, and the 10-day hull. And if you look at if you look at the three moving averages, you can see that the 30-day simple moving average is pretty slow moving average. The 10-day exponential moving average is a little bit faster than the 30, but the whole moving average is quite fast. So here's the premise. There's 5 phases, and they're color-coded on this chart. Phase 1 is red, 2 is light green, 3 is dark green, 4 is kind of a golden color, and purple or magenta is kind of this is phase 5. Here's what it means. If you're in phase 5, if you're in phase 1, we'll start down here in phase 1. It means that the closing price of the stock is less than the 10-day exponential moving average, and it's less than the 30-day simple moving average. And when you're in this phase, it means that the stock is in a bearish trend, and it's wise not to trade in a bearish trend and be long. So that's the premise. As long as if it's in phase 1, you should be either not in that trade, or you should be thinking about some kind of protective position that you could do to preserve your stock if you're in that situation. If you're in phase 2, phase 2 means that the closing price of the stock is above the 10-day exponential moving average, but it is still below the 30-day simple moving average. Phase 2 is generally very short in nature. You almost never find a phase 2 that hangs around for a long time. And so if you look on this chart, the SPX, we've got 3 in here, and it's very low. But typically, I've seen it jump from phase, I've seen it hang in phase 2 for a couple, 3 days at most, but it's generally a transition type phase, and it indicates that the stock has decided to try and move out, or it's in the process of thinking and break out. And you can look in here on this chart, and you can actually see it. They never last very long. Phase 3 means that the closing price is now above the 10-day exponential moving average and the 30-day simple moving average. So here we are. It's a dark green color, and the phase 3 is see if I can find some in here. But phase 3 can last quite a while sometimes. It can, when we were in a bullish state, it could go for quite a long time. So but we're in a bearish state right now, so it's hard for me to find a longer situation. This is a 3-year chart, so 3-year weekly chart. So now we're not looking at daily bars, we're looking at weekly bars. And typically if you're in a phase 3 situation, it means, like I say, it means that the price is now closing above the 10-day exponential moving average and the 30-day simple moving average. So we are sitting right here. typically what happens is that if your stock is bullish enough, you're going to, this is where we just turned to phase 3. If your stock is bullish enough, strong enough, eventually the 10-day exponential moving average is going to cross through up and above the 30-day simple moving average. And when that happens, it's referred to as a golden cross. And it's significant. The golden cross, here it is a case where the 10-day exponential, actually we're on weeks, so it'd be 10-week exponential moving average has now just crossed above the 30-week simple moving average. I'm actually going to jump back to days so that we can look at this, because, and I'm just going to point out where these golden crosses are at. There's one here. It bounced around a little bit. There's one on this side. There's one there. There's one here. But we are in a falling market. If you look over here, you can see it's falling. So, but you can tell that when that happens, it's generally the start of a bullish scenario, and it will often coincide, because it's so late in the game, you can kind of use it as a confirmation type signal. It's like we were doing a little setup right over here to where the price just crossed above the, we went from phase 1 to phase 2 to phase 3, and then bam, what did we get? We got a golden cross. Oh, that's good. So that's kind of like that's a confirmation for going long. But you have to keep in mind of where it's at with regard to the weeklies, the weekly bars as well. So anyway, when you're in a very strong bullish situation, you're going to find that the stock often will use the 10-day exponential moving average as a support area, and you'll typically find that if it does fall, it'll bounce off of this line. So here it is bouncing, 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 and here it was so strong it couldn't even come down. So generally speaking, it'll go for quite a while like that. But eventually, all good things must come to an end, and when that happens, the price will fall eventually. And when that happens, it means that the 10-day hull will change its direction from upward to downwards, and you're going to discover that when that takes place, that's when we refer to it as a phase 4. And phase 4 just means that your stock is hitting a resistance level. It's hitting resistance level, and it can't quite go up, and it's not a specific price, it's a range. So and they can be there for a little while, and it's in some ways it's kind of like a phase, it's kind of like phase 2. You often don't see a whole lot of these in a row. It'll go up and then it'll come down a little bit, and it'll let you know. So this is a phase 4. Every place you see a weakness thing, it's a phase 4. So in our particular case, you can just look at the tops and see where resistance was at any given time. So here's a range right here, and we're seeing phase 4 at this point. And where was it back in there? That's kind of resistance at that point. And here it is at the top. We're showing a phase 4. And if the stock continues to fall, so when it hits phase 4, it means that the price is still above the 10-day exponential moving average, and the 10-day exponential moving average is still above the 30-day simple moving average. Price is sitting right in here. That's a phase 4. But if for something should happen and the price should fall below the 10-day exponential moving average, but still manage to stay above the 30-day simple moving average, the price is going to be a magenta or a purple color, and it's going to be right in here. So any place in this range, if the price closes in there and it's below the 10-day exponential and it's still sitting above the 30-day, it means that the price is weakening. It's more weak than the phase 4, and the next phase in line would be phase 1, which is starting all over again. So just like the golden cross, when the stock is breaking out from a phase 1 to a phase 3, if you will, the same kind of things can happen with regard to the 10-day exponential moving average. Eventually, if the price falls long enough and hard enough, eventually the price is going to fall below the 10-day exponential moving average is going to fall below the 30-day simple moving average. And so here's a case of where that's happening. And when that takes place, that's referred to as a death cross. So here's a death cross for the stock. There's one there. Here's a golden cross where it's actually come back up again. And then over here it's falling again. There's another death cross. But in each one of these cases, you can see there was a phase. We saw a phase 4 up here, and then a phase 5, and then we finally ultimately saw this break down. And when it went down, and then we hit phase 2, and then we went to phase 3, and then it came back up here, went all the way up, then phase 4, and then phase 5, and then bam, it fell down again. That's kind of the context of how you use that. So if you are told what phase the price is in for a given stock, in your mind you should be able to go, oh, I know where that's at. And that is a significant concept that that's used throughout a lot of the decision-making processes. We need to use the interesting colors tools. So here's a case where I've added the inflection points, or the points where the 10-day EMA is crossing through the 30-day SMA. So here's a golden cross. These are death crosses right here, and they're shown with big white arrows, either up or down, to designate what's going on. The other thing that I wanted to show you is on the watch list, these colors here associated with the market phases also show up in here. And so this is the market phases column, and this P1 through P5, which we don't have, represents the various phases that the indexes are in. It turns out that all of the indexes are in P3 right now, so they're all going to be sitting here in this happy spot where everything is still looking good. But if we look at a different list of stocks, let's look at the S&P 100. You can see if we sort by the market phases column, you can see that there are a number of them that have fallen out of favor today. So this Capital One fell down today. What's this? Gilead fell down today. IBM fell out of favor today. So the other thing that's interesting is that these crosses, the golden crosses and the death crosses, are also shown up in the watch list too. They are in the they show up in this column right here. This is the weekly column. This shows roughly the weekly change for the last 5 days is what it is. And if it's a bright red background color, it represents a death cross. So here's one for Kentucky Fried Chicken. It happened today. And here's one for Merck. Boom, it fell down 2% today and fell below it. So, and if you're looking for stuff that went through it, here's one for Clorox. It's gone up today, and CVX energy stock has gone up today. So that's to me the significance for why we spent the time going through each of the various phases here and what it means, so that you can quickly look at your watch list and determine the phase that your stock is in, or you can sort by phase. And if you happen to own a stock, if you happen to own something and you end up seeing this phase 4, let's look at Adobe right now. See, Adobe's in phase 4 right now, but if it had been near the top, if it hadn't been, let's see if we can find phase 4 and the year-to-date's not quite so bad, maybe Costco. So this is an interesting case right here. So clearly, if you owned this stock and you had ridden it up from here, say, this would probably be a good time for you to consider either putting a limit order in, or a stop order, potentially selling out, or setting up some kind of a protective trade, either a long put or a collar or something like that, because that's the usefulness of being able to look at this and determine which way you should jump.